We've rebranded today in this beautiful location in London, Canary Wharf. And the rebrand, it's actually a very natural evolution for us. We have listened to our traders well over the last years, and we have realized that many traders are looking for very skimmed down information that's very focused on what they want to know and what they can understand. And we learned from our traders, and it realized us that we should take a step further than we have done so far. We skimmed down the website, the platform, and we've introduced a very sleek and clean approach to our clients. What does it mean for the company? The key issues that we want to convey is to make trading available for everyone. It should be available for everyone. It's a very exciting way to make money, to trade the markets, to understand the markets. And the second part is also important, that we need to allow our clients to understand what is going on. So in this way, it might seem like we're taking a very old-fashioned approach, that we take time and we have a very personalized approach to our clients. And the traders are really there to understand what's going on in the market, to break down information for them in a systematic manner and in a way that they can understand. So I think we've actually seen a very interesting year so far. It's been very positive for many people. We are probably at the point where mainly the central banks will need to take a decision of whether to increase inflation, whether to increase their lending rates or not. There are concerns about inflation, about deflation. It's many different markets with different concerns. Probably in the UK we'll see that they might have to be the first central bank to take action, to set a signal. So in this respect, it will be very interesting for the currency markets to move. On the other hand, we have got some economies which are doing quite well. We can see some very positive signals. For example, the US. There are also some positive signals from certain European countries, and we see some green shoots, as you might call it, and there's positive lights there as well. Japan is also a very interesting topic. We see Mr. Abe to introduce his third measure of the Abenomics. It would be interesting to see how they can implement it this time. They've tried several attempts. So it's going to be an interesting 6 months ahead until the end of the year. It's an interesting question. Yes, sell in May and go away. It's a very old sentence that people have known for many centuries. I think the times where it's come, it's always a chance to take a step back and reflect on the experience you've gained so far. If you're new to trading, maybe you want to see what has gone well so far this year, to understand as well how trading has worked for yourself and where you see yourself, and in terms of risk appetite and in terms of trades you enjoyed. Because at the end of the day, it's all about, you need to be comfortable with what you're trading, you need to be comfortable with what you understand, you need to enjoy the trading. So my advice would be to, if you see that there's, there are always opportunities in the market, especially if you're focused on short-term trading and if you look at volatility. But if you want to take a break, take a step back, take a look of what you've enjoyed in the last year, what has worked well for you, and compile all the information and the outlooks and the economic and the fundamentals which are coming out throughout the next half year, and see how you can benefit from that.